thank everybody for joining me this afternoon or morning or evening, wherever you may be from. My name is Ted Posobiec, like Dan has mentioned, and I want to welcome you to how to use volume spikes to forecast profitable trades. Let's get started with a disclaimer. I'm sure everybody has seen this today at least once. Dan had mentioned I am a full-time day trader. I am not a financial advisor. I trade mostly now. I trade futures. I trade just about anything that moves. So let's get started here. From working with thousands of traders over the last few years, here's what I've learned. Most traders have no idea what to do with volume. They'll know how to, sure they might know how to, what volume is and how to read it on a chart, but they really don't know what to do with it once they have it. I know I was that way until I started seeing something that was always there, just something that I hadn't noticed while learning from others. If they did, I do believe that 85% of the traders would be successful rather than the other way around. Volume speaks loudly and it tells you what to do in most market situations if you know how to listen. So today I'm going to teach you how to listen to volume and what to do with that information it tells you, not just theory. I'm going to show you a very particular trade that I take almost every day. I don't take this every day, almost every day. That's almost is not really true. It is every day at the open of one market or another. Once I show you this, you're going to have one of those aha moments that will forever change the way you look at the markets. It's going to be so simple and crystal clear that you wonder why you've never noticed it before. But first, who am I and why should you care what I have to say? I'm just a regular guy like anyone else. I was a commercial diver for over 20 years working out of Louisiana. I like to ride motorcycles, as you can see, and I collect a few guitars, and I also play a little bit. I've been trading stocks for almost 18 years. Most importantly, I love the lifestyle that comes with being a day trader. Before I was day trading, I was working 10 to 12 hours a day, weeks on end, months on end, a lot. If I was working offshore, I was working 12 hours a day minimum, and I could be gone for 3-6 months at a time. Today, my idea of full-time is just 2 to 3 hours a day, and then I get to focus on what's most important in my life. I also host E-mini Insider Trading Room at WINvesting.com Monday through Friday, 7:30 to 8:45 Eastern. Here's what one of my students had to say about me. Ted Posobiec is a phenomenal trader and coach. He is truly driven to help his students achieve their personal goals. I was treading water with my training for a long time, taking 1 step forward and 2 steps back. But Ted has helped me to turn that around by building on solid fundamentals. It was pretty amazing how quickly an account can grow when you're consistently profitable. Out of the last 20 trading days, I've had 2 losers, 2 break-even days, and 16 winners. My account is up over 50% in 30 days simply by cracking out base hits. Pretty exciting. Wouldn't have happened without Ted's help. That's enough about me. So let's get back to volume and how it predicts profitable trade setups at the market open. This is just one trade that I'm going to show you today that you can take a look at tomorrow because all the markets have all opened up today. So take some notes here so that you'll have these notes coming up, the rules that I look for as soon as tomorrow comes, because you may not have the video yet tomorrow. First, let me define what I mean by open market, or the market open. The open of a market is the open outcry or regular trading hours. The market opens different for agriculture, energy, equities, interest rates, and metals. You can look up whatever you like to trade. You can look that up on cmegroup.com, trading hours, or just take a look at cmegroup.com and you can find it in there. I do know energy opens at 9 o'clock Eastern. Equities opens at 9:30 Eastern. Interest rates and metals, they open at 8:20. Those are the three that I concentrate mostly on. Those three, four really. 8:20 interest rates, metals, bonds, 6E is open at 8:20. Gold or NQ, YM, ES, they open at 9 o'clock. And CL or oil, that's what I like to trade most. That opens at 9 o'clock. But take a look if there's any other thing that you trade, you can take a look at that at the CME group here. Look it up. Volume in the open trade for a short. Here's how I interpret what volume is telling me. A sharp increase in price and a sharp increase in volume can mean that the bulls have exhausted. Means all the buyers have bought what they're going to, and they start to step aside, and the sellers are now taking over. This is a setup for a short entry. Volume and the open trade short. Here's the, in other words, this here is what you can write down here. A big increase in price and a big increase in volume means that the market will probably drop, and I'm looking for a short. Write this down. This is real important for this the volume spike trades that I use. Looking for a big increase in price, a big increase in volume, and I'm looking to go short right there. Here we have a chart with a sharp increase in price. This is what I'm looking for, and a sharp increase in volume. The buyers are out and the sellers step in to go short. Volume and the open trade for a long. Here's something else that you'll want to keep a close eye on. Possibly write this down. A sharp decrease in price and a sharp increase in volume can mean that the sellers have exhausted. Now that the sellers have stepped aside and the buyers have found value at the level, they start to take control. When I see this, sharp decrease in price, sharp increase in volume, I'm looking to go long. So let me simplify that. This here will be easier to write down. A big decrease in price and a big increase in volume means that the market is probably going to take off, and I'm looking to go long. Here we have another chart. We can see right here we have a sharp decrease in price. It does pass a little bit. I do expect that to happen. There's other things I'm looking for at the same time. We'll show you that here shortly. And a sharp increase in volume. Now I'm looking to go long. The sellers are out, buyers are in. I want to go long. Here's a simple way to remember what I have just said. A sharp increase in price plus a sharp increase in volume, look for a short. Up plus up equals down. A sharp decrease in price plus a sharp increase in volume, I look to go long. Down plus up, I go up. Dan, I think you might have your mic on. you know what to look for, let's take a look at some charts. I see James is looking at gold. I don't really trade silver that much, but we'll take a look at some gold charts here. How do you know when it is not a breakout versus profit being taken? Looking for different support and resistance areas. I don't take breakout trades. Can't really say that, because an open trade is when the market opens, it's completely different than a regular breakout trade where you have a double top or double bottom. So that's a little different than what I always tell my students: when you're trading in the open of a market, all rules are gone, because it's the excitement that comes in. And normally a breakout is going to fail the first time through anyway. I do use 1 minute charts. You don't have to use a 1 minute chart. You can use 2, 3, 5, 10, 15 minute charts if you like. So let's grab a chart here. And let's take a look at what gold did this morning, and then we'll go back a little bit. Gold, and here we go. What I have here on this chart here, let me get this wider. This is a time indicator. Just helps sets up the time 5 minutes prior to the market open. This is the candle I'm looking for, the first, possibly the second candle. That's what this indicator does. This indicator is my volume spike indicator. It helps me identify where a volume spike comes in. I have it set up so that I do not get a volume spike if the prior volume is below 200. That's why you don't see an arrow here. So if I don't see an arrow there, I will determine this little arrow here. I'll determine with the whether I want to take this candle here. This is the one I like to get in on, but sometimes I'll wait and get on this second one, even possibly the third, as long as I have a sharp, this here would be for a long setup. I have to have a sharp decrease in price and a sharp increase in volume. We have that here. The sharp increase in volume, sharp increase in price. We also have it here. It's definitely above twice the amount of this previous volume right there. What I'm looking at is I need volume to be at least twice the amount of the previous volumes area. That was below 200, so it's not going to throw the indicator off. If I'm looking at the chart, I want to see if there's, prior to this open, I want to see if there's any areas that might be of concern to me. Where I might be wanting to go long. And I'm looking for swing areas to the left. I go to the left. This one here, once I get the volume in, and I say I take this trade here short, and it does not, let's see if I took this. I took a trade back here, so that one, no, I didn't take it this morning. If I did take this trade the first time off this candle here and I get stopped out, I will wait and get in again. I'll do it twice. Once that I do it twice, and if it fails twice in a row, I stop. I'm not going to go try it 3 or 4 times. I'll just wait for the market to come back and possibly wait for another volume spike. But that's what I'm looking for here. Let's go to another day. I just got back from vacation, so I don't know what happened. Let's get rid of these for the week. We have a beautiful setup right here. This is what I'm looking for. That's a real nice decrease in price. Excellent. Sharp decrease in price, sharp increase in volume. I'm looking to go long. Again, I want to get in on this candle if I can. If I can't get in it, I'll try getting in on the second candle, possibly the third. Now, NQ is a little different. I will try that twice, but sometimes I wait for the second and third candle. On gold, I usually try to get in on this one, possibly wait for the second one. I do like to see it coming down through these resistance areas for a possible turnaround, especially at the open. I'll take another look at another day here. That was the 5th. Nothing there on the 4th. Actually, there was, if you got in on this candle here, it looks like you could have gotten a few ticks, just depending on where you got in. And let's see, 8 ticks possibly, so maybe 4 ticks on that. Let's go to some ES. I use NinjaTrader. The indicators work on NinjaTrader, but you don't necessarily need to have the indicators. As long as you can read volume, you can do this on any charting platform. Here's ES for today. We do have sharp decrease in price. Right there on that candle. We can see the sharp decrease here, and we went long. Let's go back a few more days other than the this past week here. I don't like to go back too far because then we really don't get an idea of what's happened. Let's see if there's some here that may not have worked. They all don't work. This one here, this volume says to go up, but that just depends on where I'm starting to see the volume grow. So this here could be a short for up here because the price drove all the way up here. So if I had a level anywhere here, let's see if that comes there, came close up to there, right there. We're going to go through some market replay, and I'll show you how I'm getting in on some of these. Is there some other markets that looks like a good short? Yeah, even right at the arrow there. This arrow is the 30-minute trend off a EMA. I'm not sure which one, but nice short. This one here, if you had gone long, depending on where you went long, on this candle, even this candle here, because time has already passed, I don't know if it did go up at all. Let's say it did, and you got in right at the close there, maybe 4 ticks. I doubt it. Sometimes the price will jump up and down, back and forth. You have other things to look for, and we'll get into that here. The long, I would have looked for a long down here because price opened up here. This is where I'd be looking for a long. That may not have worked for a long. For the short, it definitely did. And again, this is after the fact. We're going to go through some market replay. Is there some other markets that somebody likes to look at? ES, YM, NQ, went through a couple of gold. Here's one that looks like it would have given me a little problem. May have taken almost all the heat that I was willing to take on that. ZB, I haven't traded sugar. What's the number for that? Oil, we'll go through some oil. ZB. ZB is a little slower in the morning. I have traded the open, but normally I'm trading gold at that time. So let's go ahead and take a look at ZB. See what that may have done. ZB. Look, I have a cat that's been gone for a week. Just came back and making all kinds of racket. Here we have the open, 820. Let me make sure this is right. ZB 820. We have a doji right here at the beginning. Price did pop down. Take a look to the left. That does call for a long. And maybe a couple of ticks if you took it off the tap down here. Then it does head down. So that day did not work. Takes a little while for it to come out. It does pop up eventually. That is a significant decrease in price, increase in volume, and it took a little heat. It does go up eventually. The green parallel lines are just the 5 minutes prior to the market open. It just brackets the high and low of 5 minutes prior to the market open. It just helps me. Why do I have this? So it helps me identify where the range is just prior to the market open. Will a 15-minute chart work better? I'm not sure. I don't use a 15-minute chart, but I do have some people that do use it. Then this here indicator would be off. So you'd have to either set the indicator up to show it right at that time or draw lines on it manually. 820. I've been using a 1 minute chart for several years. The one that I like other than the 1 minute would be a 5 minute. So if you had a mark out here at 820, you're not going to get it off of 15. It would be this candle here. Look at it in here. Where would you get in on it? You'd really have to do this in market replay. A friend of mine, Wayne, uses a 15-minute chart. So that's ZB. Let me try to find that sugar. Searching for it. Let's go ahead. While it's doing some searching there, let's go ahead and knock the live chart out and go with turn on my market replay. Disconnect, tops, and I want to connect to market replay. I find market replay to be one of the most valuable tools for learning how to trade. And let's pull this out of here. Trying to find it. Yes, I got a couple of charts here. Market replay. Here we go. I like the 816. Looks good there. And market replay is up. So let's go to 29. Give it a second here. Go to ES, just because it starts at 9:30, we'll go to 9:29. I want to show you how I get ready for this particular trade. ES 9:29. First thing I'm going to do is, prior to this, usually 5 minutes prior, I'm good with that. I'm going to start marking some levels above and below me. Now, just depending on where the candle opens on this side, I can use these lines here as my levels also. I like this little dip right below here and possibly down here. I don't need much more than that going out. So once I have this set up prior to the open, I wait for this candle to start forming. Once this candle has started to form right on that red line, the next line is actually the open price. I'm going to place an order above here and one down here. Now, let me pause this. What I'll do is, if this candle that opens, this next candle that opens, if price starts climbing up here, I'm going to grab my short and I'm going to put it at a level, either this one or this one, depending on where it's going, and I want price to pop up above it so I can drop it. And then price comes down through me. I learned how to do it this way, and I've been doing it this way a lot. You can put your sell order up here and your buy order down here if you like. Just when you're practicing in market replay, make sure you do it the same way all the time. So let's go ahead and get rolling here. Does the indicator work in Market Analyzer in Ninja? Not that I know of. It works on the chart here real good. Price is moving up. It's starting to pop up here. Still have no real indication of what I want to do, because this next candle is the one that I want to get in on. We had a volume spike just prior to that. But when you start getting closer to the market open, things change a little bit. And this, I don't have a whole bunch of stuff on my chart. We have the price coming up here. It is pushing up. It gets above this here. I'll be looking to go short. The volume has popped up real nice. I want to try to get in. Push up a little higher. We'll give that a shot. And we'll let it go here. if I get taken out, I will go ahead and try to get in again. And we have an 8 ticks and 16 ticks. Came up here. It would have been nicer to get in up here. Could have waited a little bit longer. I still like the short here. Oh, am I in more than once? Oops. I don't know what happened there. It's way too big of a stop. Something happened. I don't have a... Oh, I guess I was messed that up real good. That was a buy. Really screwed that one up. Let's try that again. We can go to another market. I got my lines here where I want them. Just trying to show how I get in. That's not right. I need my buy up here. And my buy, sell. Coming in here. That's what I forgot to do. Get rid of that once I'm in. Now, if I happen to get taken out, I'm going to come down a couple of ticks. If I do get taken out, I'm going to go ahead and get back in. I have this line here. I'd like to see that pop up. If it's going to go, it pops up there. There's where I probably should have waited to get in. See if there's anything else to the left. Nothing. That would be a breakout. We're going to do some other markets. YM traders out there. You can wait for the candle to close. If you can't get in on the first candle there, we'll wait for the candle to close and wait for it to come back to you. But I've learned, the way I learned how to do it was trying to get it off this candle here. It's very successful for me and others that I've taught how to do this. What day is this? The 29th. It grabs that first target. I'm going to start locking in. And there we go. Not good, not bad. So we've got the 30th. That was a Friday. Thursday, Friday. I wasn't here either one of those days. Let's try YM. Targets and stops, what I've got here is a 8-tick target and a 16-tick target with an 8-tick stop. I do like bringing them in a couple of ticks prior to the, once I get into the trade, I'll go ahead and tighten it in. I do all the moves myself. I do not use a auto trail. I do have a couple of ATM strategies that do have an auto trail, but pretty much for the most part, I don't use the auto trail. 829 YM. This is one that I have not traded in a while because normally I usually trade the NQ. And let's just take a look, see what we got here. First thing, what am I going to do? I'm going to look for some levels above me and below me. 2's enough. I do like where price is right now. If it comes up here, I do like the short from here up here, and we could even look for something a little higher here. 2 to 3 above, below is plenty. That's just my personal opinion. So now we have that. Let's go ahead and open this up. I like to see my chart, what's going on, and we'll hit play again. It's formed in that line. I need to place my orders, and I like to have them above these lines or below them. I like to have them far enough out so I don't actually get taken in the wrong direction. Really recommend using the market replay at regular speed because you know what time you're looking for these trades. It doesn't take that long when you're learning how to do this. So you can go from one day to the other. You can do a week at a time and just keep doing that week over and over. Yes, I use this with CL with Crude. That's my favorite market. Getting a big price move up. That comes back up here. I'll short this. I need it to come back up. I want it to pass me. There it goes. And I've got the same ATM on this as the other. Up. Lock some in. Could take this, bring it down here. You'd have a double bottom right here. Be nothing wrong with doing that. Tighten it in. Keep your profits. Don't let a good trade turn into a bad one. And then what I wait for, there's other things that I wait for after this happens. If it does go down, could be looking to go long. Look at the double bottom here. Be a nice area to go long. Once this candle closes in 10 seconds, once we get a new candle, I'll another tick. A little too early. It's all right. It starts coming down below this green line here. I'll start bringing my stop down. I want it to pass that. There we go. Coming down. I just keep tightening it up. YM is $5 a tick, so it does take a little while, but you can get some pretty nice moves out of this. 20-some seconds left. Down far enough. It's almost hitting this line here. I'm going to tighten that up. And I'll just keep walking it down. And I'm out. Not bad for a YM trade. Clear that out. See a lot of people CL. Grab some CL. And where'd my market replay thing go? Let's put that up there. Now I'll bring it back down. CL. That starts at 9 o'clock. So what I'll do here is I'll go ahead and do the same thing. My targets and stop. The stop's pretty much the same. I like a 5-tick stop, but a lot of times I'll use anywhere from 8 down to 5. Don't like going anything more than 8. So we got the first, and let's go to 8.59. I'll show you the ATM here in a second. 8 and 5-tick target, 10-tick target, 10-tick target, or a 15-tick target. That's what I like. And I also I like, it just depends on the day what I see going on, because I also like early in the morning I like a 3-tick target and a 5-tick target with a 5-tick stop. And I'm trying to get 59. There we go. And take a look, see what this range is. 11 ticks. Just depending on where this thing wants to open up, I could go long down here. If it opens up here, I'll go long here, possibly long here. If it opens up down here, comes up to here, I could short it right there. So I can have a line here, line here. We already have this here, so I don't need that one. We've got the green line there. Here. Oh, that's pretty good there. Going to even bring it all the way down here. We have this really tight here. I could leave that just like that. There's 3 areas there to go long, especially if it starts pushing down, passing one, past the other. We'll just have to see where we want to go long. If it comes down, we'll just have to see where it opens up at. I'd like to see it come down to at least here. That gives it a real nice equal bottom. Or better yet would be down further. The further it comes down, the better. But we'll just Guess I'm going to have to keep that above there. That's not the ATM I want. That's the 8816. I could use it, but I want to go with a 5 and a 10. I like 15 ticks, and I'm using a 7 tick stop on this. The 7 tick for gold, I'll use a 7 tick stop. 7 tick. A lot of times with gold, I'll use a 1 target, 10 tick target with a 7 tick stop. And let's go ahead and push play. Now we're in the line there. We've opened up down here. I'd like to see price just stick around here. Shoot up there for the short. This does take a while to get going. Five seconds. Keeping an eye on my volume. Right there's the volume. So it's got to come up to about 800 before I can take the trade. We opened right here. Price has come down. Price is pushing up. Price came up to here. If it starts to fall down here, I'll be looking to. We're just getting above the previous volume. Coming down. I'm looking for a long now. Oh, that's not where I needed to get in. That would not happen. That order right there would not have gotten in if you were live. It would have kicked it out and you would have had to redo it. You have to wait for price to come pass it. What happened was I dropped it early where price was above here. And if you do that in a live market, it'll kick you out. Yeah, on that one there I did. I should have waited for it to pass back down or get in here at the close of this candle. One or the other. I normally will try to get in on this candle here before it closes. When I do the market replay, I need to do it like it was live. So I do know that with that, this particular trade would not have triggered me in. Even if I had gotten in here at the close of this candle, I'm still good. My stop would be a couple ticks below here. So let's go ahead and push this up here. I already got the first target coming in. And that would be up there a few ticks higher. Wrong target. I grabbed the wrong, it's just not my day. Let's go to ES, same day. NQ, let's do an NQ. and that will be 9:30, 9:29. Slide that over. Everything starts over. So what I want to do again, mark some levels. Looks good there. And I'll put my buy order out and a sell order. Why don't I trade right now live? Because I'm showing a particular trade at the market open. I'm normally done trading by 10:30 at the latest, so I wouldn't be trading live anyway. Market's going up. I'm kind of looking for that short. Push up there a little higher. There we go. We'll speed this up a little bit. Come up. This time I'm going to want it to come up. If I have to get back in, I want it to come up here. There we go. First target. And I'm running it a little too fast. I can't keep up. Trying to hit that as regular speed. With that first target being hit, I want to be at break even. This year I would actually be using an 8-tick stop with an 8-tick target and a 16-tick. It's 5 minute. 5 minute. I just dropped it. I'm trying to read some questions here. Yeah, waiting. I'm trying to get in on the volume. Like to wait for it to there we go, to pop out there. I need to get this out of the way. It's a nice volume, nice movement there, but I didn't get the volume. It's got to come up above the previous one, at least twice the amount. Let me go ahead and see if I got this right. I want to get to some of these questions here. Do another one right here real quick. I'll walk it through. I don't have any data for the 5th. Why do I not? Then let's go to what is today. Today is the 6th. See if I have data for the 6th. And we'll run it through, we'll walk it through. 9, 8, 8:59. Step 1, just prior to it opening, about 5 minutes, I'm going to look for a high and a low. Everybody understand that? Do we have any questions where we go here, from here? What's the next thing? I'm going to wait for price to get into this bar right here. I'm going to place an order above it. And one down here at the low. Could go right here also. That looks pretty good. And if price comes down, at least down to this area here, it doesn't have to go all the way down or all the way up to an area. It can be in between, but what I need to have is a sharp increase in price, a sharp increase in volume in order to go long. Or short. Sharp increase in volume, sharp increase in price, I look to go short. A sharp decrease in price, a sharp increase in volume, I look to go long. I'm not using any other, nothing else, no other filters. Just volume and the lines above the most recent areas right here. Most recent swings. Get rid of that. Double top. Possibly could come up to this one. It was 4 ticks, or 2 ticks anyway. We had the sharp increase in price, sharp increase in volume. And get to the first target, you can go -2. I like break even or +1. I'll leave it at break even for right now. And we're out. Made $50 on that one. I want to go back and read some questions here. There's quite a few of them. If I missed one of your questions, please put them back out. I did not get sugar, unless somebody can give me what, so I don't have to go looking for it. What you give me there was the wrong number. I can't get that. So I'm going to go back here. And Theo, seems like you're in before the open range breakout using volume as opposed to waiting for the 5-minute opening range breakout. Yes. John, I've answered your question there. Why don't you trade right now? Because this I'm showing an open trade. Here's Theo. From the open time, how much time would you go to bang those trades in different markets? Example, 1 to 30 minutes. I know, I mean, if I don't get in it at the second or third, 2-3 minutes is 3 minutes would be the max on how long I'll wait for that trade. Now, staying in the trade, I know me. I'm going to take whatever I can and get out. With the price just happened right here, this was a real nice volume. We did not get a indicator to go up, but it did go shoot up. We have the sharp increase in price, sharp increase in volume. I've been looking for a short. Take a look right here. Pretty nice there. And that's the second candle after. Got some off the first candle. Wait for that second one here to pop up again and come back down. But I am looking for stuff to the left to verify my entry in. Sharp increase in price, sharp increase in volume. I look to go short. Sharp decrease in price, increase in volume. I'm looking to go long. And PW, so you short on increased volume and price goes up no matter the trend. Yes, no matter the trend up or down. If I get for a short, I don't care if the trend is, especially during during the time that the market opens here. With CL at 9 o'clock, gold 820, ESYM NQ at 930. I don't use the decrease in volume. If you're actually I do. If prices moving in a direction on lower volume, I stay into the trade. Gillen, does that make sense? Does that make sense to anybody? If the volume is going down, like this short here, volume's coming down, I'll stay into the trade. Stay into the trade to a support resistance area or a trend line. That's how I would use that. The percentage of winning and losing trades is in the upper 70%, 75 to 78. I could have better if I wouldn't tighten up my stops so much. If it's going down on low volume, isn't that strength to the upside? Well, it depends on if the price is coming down. If price is coming down on lower volume, things are starting to peter out, and I'm looking for some kind of a volume, or actually it's going to start going sideways from what I see. Stops and targets. Stops on, you can see my ATM strategies. I have a lot of different ones. I have stops from 7 ticks. This here's a 1 target. This is one I like using on gold. 7 tick stop with a 10 tick target. I will use a 5-tick stop with a 3-tick stop and a 5-tick target, or a 3-tick target and a 5-tick target on gold also, but that's my favorite one for gold. I have ATMs for a 10, 20, and 30 with a 10-tick stop. I have ATMs for 50-tick targets, maybe a 25-tick, and here's a 25-tick target and a 10-tick target with a 15-tick stop. They vary. It depends on the day, depends on how much volume is coming in the morning, so on and so forth. Today I've shown you how to listen to volume and what to do with that information, but that's only the beginning. I've got 3 volume spike trades that happen throughout the day, not just at the market open. Remember that. What I showed you today is just one. I have 3 other volume spike trades that come in throughout the day. One more than the other. So I want to show you all 3 of these along with nuances to make each trade even better. Introducing the Volume Spiker on-demand trading course, Volume Spiker. In this online course, you'll get in-depth training on how to take these volume spike trades in multiple markets. Here's what you'll learn. Volume Spiker overview. The course is broken up into 7 different modules. I'll show you how to set your charts up, how to find the right broker, the 3 different volume spike trades to look for, instructions to prep for the trading day. In volume 1, we have a platform set up, how to install and configure NinjaTrader if you don't already have it, ATM and trade executions, contract rollover, how to use the market replay to master your trades in simulation. Module 2, chart setup. We'll go into the indicator, putting the indicators on your charts, regular volume, volume spike indicator, and the time indicator. We'll also go over what I look for news, what I'm using to check for news in that module. In module 3, what usually happens when a volume spike occurs. 3 versions of volume spike trades. There's one after the market, what I just showed you, one after the news, if there is news that day, and one out of the blue. I trade all of these, all 3 of these. This one here every day, this one here comes up every day also. News, just whenever there's news. Kind of makes sense there, don't it? I'll show examples of each and explain how I trade them. I'll show you other things to look for to help confirm the trade. Modules 4, 5, and 6, we go over 3 different markets, and you'll learn the nuances of all 3 versions of the volume spike trade. After the open, after news, and out of the blue in all 3 in 3 different markets. I think I skipped something there. Nope. Money management. Module 7. Proper money management is more important than any trade setup. I believe that wholeheartedly. You'll learn how to choose the right daily profit and loss limits for you and how to develop the discipline to stick with them. When you register, you'll get the 3 exclusive bonuses, the following. Bonus 1, custom indicator. The same indicator I used to find these trades in a live market. Helps eliminate the guesswork. Shows you a volume, when a volume spike trade is setting up and when to get in. This is a $500 value. 30 days in my trading room. Join me in my E-mini Insider trading room Monday through Friday, 7:30 to 8:45 Eastern Time, and trade the volume spike trade with me live. Get personalized coaching in the room with me. I open up the room so that you're able to ask me questions rather than write them in. I'll open up the mic for you. There is no auto renew and no strings attached with this bonus here. That's a $200 value. How to trade other people's money. Don't risk a dime of your own money. Learn how to trade other people's money with this online trading course. how to pick the right prop, how to pass the trading test. This is a $100 value. So how much is all this worth? Add it all up. Volume Spiker online trading system, $997. Volume Spiker custom indicator, $500. 30-day in my E-mini insider trading room, $200 value. How to trade other people's money, $100. This year, if you were to pay for each one of these individually, that'd be $1,797. I make well over $1,500 a week using the Volume Spike trades. I have students making over $1,000 a week using these same setups. If I priced the course at $4,000, it could easily pay for itself in a month. I'm not going to ask you $4,000 or even $1,797. Here's the reason why. Because I remember what it was like when I was in your shoes. I didn't have a system that was predictable, something that happens all the time over and over. This works for me and a bunch of other people. The thing to remember, for me to remember when I was in your shoes, trying so hard to find the right system, what worked for me, works for my personality. It was hard. And to be completely honest, I want to make this affordable as possible because I know when you're successful with this system, you'll want to invest more in my advanced trading with me later. And so I'm not even going to ask the $997. The price, that's what the price is of the course on our website. If you sign up today, get the Volume Spiker on-demand trading course along with all the bonuses for just $297. Register now at www.winvesting.com/spiker. I'm so confident that you'll find success in the Volume Spike trade, I'm going to take all the risk on me. This is backed by my 90-day 100% no BS action guarantee. Sign up today, check out the entire course. Trade at least 1 day a week over the next 3 months using the strategies taught in the course, starting with just $5,000 in real or simulated trading account. After 90 days, if you have not generated at least $1,500 in real or simulated profit, show us you took the proof that you took the action above for a full 100% refund of your investment in the course. If you're still on the fence, maybe this will help. I want to help you succeed, and you'll learn a lot faster if I'm there with you to answer your questions and show you how to take the trades in a live market. So if you're one of the first 15 people to sign up, fax action bonus for the first 15 only, triple the trading room. Get 90 days in my E-mini insider room instead of 30. Register here at www.winvesting.com/spiker. Now here's what another one of my students had to say about my training. Ted worked with me and I did exactly what I told him to do. Today I can say my trading and confidence are at a level I never thought I would achieve. Successful trading can be a life changer. And I want to thank Ted Posobiec for changing my life. Russ Nicely. I can't promise that this will change your life when you sign up, but I'll do the best to help you become a consistently profitable trader like I've done for Russ and other students. Register at www.winvesting.com/spiker. Got some more questions here. Just about ready to run out of time here. I think I am out of time, but let me see. 997. Yes. You'll get a video, so you should be able to get it with the when the video comes out there also. I trade no more than 3 on the average. I have, prior to going on vacation, I have put some 6 contracts out. 2, 3 contracts at the most. So it'd be 1 to 3. Some of you came in here early enough. You've seen what I made today. It was a little over 400 today. It could. How do you know that the sharp price increase, sharp volume increase, isn't absorption volume, and therefore it still could go up? Yep, you're absolutely right. It still could go up, but I find more often than not it goes down. You have to look to the left. What happened to the left? If it's in a hard trend, do you have other things to look for? Trend lines. Gillian, I agree with you there. Thanks, Chris. He said, now don't lie. You were trading 12 contracts during the Europe stuff. Yeah, I did. Yeah, I made a boatload. Thanks, Chris. I forgot about that. I don't do that very often. Yeah, I made more than $1,500 that day. How many trades do you take a day on average? Trades a day, about 15. I'm taking trades in my room, but after the market's open, more like 8. I think that's about it. If I have missed any of your questions, yes, I'm only Eastern time, 7:30 to 8:45 Eastern, John. All right, I think I've run out of time, and I might be a little over. I want to thank everyone for joining me. Thanks, Dan, for having me come in. And register at www.winvesting.com, Spiker. Chris just said he just made $200, or did I read that wrong? Nope, I must have missed something. You did make $200 while being in the room here. Yep. Chris is using the volume spike trade. He just made 200 while we were on online here. All right, Dan, if you need to, you can take it over. Thank you all for joining me.